Hi, folks. Welcome to our show. Have you ever wondered as a lender how you're going to get taxed on your income from the lending? Since we're close to tax time,
Turn my ringer
although oh, by the way, those of you in the audience, turn your phones off, please.
off.
We'll find out how you're going to be taxed right after this.
Awesome.
Yeah, and Wendy just pointed out to me, if you're watching us from your phone,
Don't turn it off.
Don't turn it off. So thanks for joining us on the Passive Wealth Show. We are Carolina Capital Management. We are lenders in the Southeast, and we specialize in real estate investment loans. So if you're interested in borrowing money, go to our website, carolinahardmoney.com. Click on the Apply Now tab. If you are a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell, all that good stuff. We also have a comment section on either the right side of the screen or underneath, depending on the platform you're viewing us from. Did I cover everything?
You did.
Right.
We hate that Jonathan isn't with us today. He is in the process of
That's
eliminating
him.
the opportunity for him to have children.
HMDA or HIPAA.
HIPAA.
HIPAA. That's privacy. Don't
HMDA
say
is
anything.
mortgage stuff. No, I didn't say exactly what he's doing, but I'm sure they can read into that.
Okay, I'll move along. How's your day going?
So far, it's been busy, which is normal. Did you get to read all the good stuff that's coming out? Well, here's what's funny. Today is April 15th, right?
Mm-hmm.
Used to be April 15th meant something, right?
Yeah.
Used to be that you really had to do your taxes by April 15th. But really, for the past 2 years, they've just pushed it out there for us.
Well, part of the reason is the IRS is way behind anyway. So
Crazy behind.
Yeah.
Crazy behind. Yeah.
It's funny. We have a CPA firm that is in the building below us, and they've been working double time for months.
They have.
And they will
It's
probably
Saturdays,
be
too.
working double time for a few more months too.
Mhm.
So it doesn't really matter about that date, does it?
That's right. No more.
So let's talk about some breaking news before we get to our
All righty.
question. Wow, that's some interesting.
That was
tunes
pretty.
there,
But I
isn't it?
always love our new stuff. I'm seeing what our graphics are going to be.
So let's just get to the unemployment numbers. They actually, first-time claims went really low. They're expecting 703. They came in at 587. So that's good news.
Well, it makes up for last week then, right? Which was
can-
really bad.
The continuing claims came in a little bit higher than they expected. I can't remember what it was, but last week it was like 7 million. So it's in that range still. Economic numbers came out this morning though. So retail sales actually beat expectations by quite a bit. It was 9.8% over what it was from February.
Now, is that different from going into a big box store or buying it online? Do they put all
Whatever.
that in the same
It's all in
category?
the same numbers. So retail sales. So it can be online, it can be in person. doesn't
Well,
matter.
they got all the tax, they got the stimulus money. So everybody's out there buying stuff. I couldn't get a TV at Walmart.
It is really, there's a few things happening. Yes, that has something to do with it.
It's crazy.
People getting that extra money. A lot of people are investing those stimulus checks in the stock market.
The smart people are.
One of the reasons why the market keeps moving up. Well, one of them is you can't really make any money in bonds, so you're going to have to put it in equities. But the numbers were well below expectations in February. But we had that really cold snap in February. So some of those March numbers are because people weren't getting out. Some of the March numbers are also because of the cold. They're having to go out and buy a bunch of stuff to fix all the broken water pipes from the places that weren't used to it being cold.
Yeah, replacing sheetrock and flooring and All kinds of stuff. Yeah.
Here, and we're going to talk about this in our next segment, but the stock market is absolutely booming right now. And it's kind of a false narrative. And I'm going to tease it a little bit. We're going to talk about this in our next segment, but
should you stay or should you go?
Yeah. And should you be, companies are profiting, cash flow is great, but is that still a good thing, right?
Good question.
Well,
Who knows? See. What's Warren Buffett doing?
I don't know.
Yeah.
He doesn't usually tell me.
No.
Listen, I keep up with a lot of it, but I'm not a huge student of what's breaking all the time.
Right.
I'm more of and Wendy's the same way. We're more long-term thinkers.
Yeah, we're thinking about what Jimmy Buffett's doing. What's going on down in the Keys?
Warmth and manatees.
That's right.
Right.
Good fishing.
So, yeah, let's go ahead and get to our ugly question.
The ugly question. I like that one too.
So our question for today is, how is interest income taxed if I lend from my personal cash? Well, the simple answer is just like any other income would.
All right, show's over.
It's not a capital gain. It is just ordinary income because you're receiving interest payments monthly or quarterly, or you know what? Now that I think about this,
it
depends on how your note is written. If you are charging interest, it's still going to be taxed the same way. It's just going to be taxed over different periods of time. So if it's taxed, if you receive it quarterly, monthly, biannually, you're going to pay it that year, the year that you receive it. So if you do a note where there's no interest until, or there's no payments until the maturity date, then you would pay that when you receive it.
When it's paid off.
Yeah. So if you have a 5-year note and it's just accruing over 5 years, then in the 5th year, it might as well be a capital gain. However, it won't be taxed as a capital gain. It'll be taxed as ordinary income. It'll just put you in a much higher income bracket. It's like getting a bonus after 5 years.
Right. So, but if you're lending, that's if you're lending with your own money. If you're lending through self-directed IRAs or 401ks, things like that,
it's still taxed. It's just deferred.
Yeah. Yeah. Well, unless it's a Roth. Receive it. Unless it's a Roth.
Yeah, but you paid tax on that money previously.
But that's when you put it in it. So not really. I think if you're earning interest off of money that you have loaned out through your self-directed IRA, that money coming in is not taxable.
No,
is it?
No, it's not.
Okay.
The money that you're paying tax on is the money, if it's a traditional IRA, is as you're receiving the money, that's when it's being taxed. You're not receiving the money if you're lending it out of your IRA. Your IRA is receiving the money.
Right.
When you receive the money as a distribution
is when it would be taxed.
Custodian.
Gotcha.
That's when it's going to be taxed. If it's a Roth, you pay taxes on the money before you ever.
But you still don't pay taxes on the money that you earn.
No, you never pay tax on the money
that the interest earns. Yeah. And by the way, you can learn so much more about all of this at QuestCon, which starts tomorrow.
Yeah, so Sharub, do me a favor, and if you don't mind, throw that link up. We still have
she might have it over
there. It is right there on the bottom of the screen, and it's in the comment section as well. It starts tomorrow, but there's 30% off if you use that link. And Wendy and I will both be on different panels throughout the weekend. Looking forward to that. It's this year. It's all about lending.
Yeah, which will be very interesting.
Yeah, so they have some great folks on there. I know Fuquan Bio, one of our friends, is on
Eddie
there.
Gant will be on there. Eddie
Gant,
Speed.
Eddie Speed.
Martha's going to be
Yeah.
on there.
Tracy Z.
Yeah, and
Fred
Fred.
Drury.
Yeah, they're so knowledgeable. They're going to really be in depth talking about notes and creating notes. And
I know there's others that I'm forgetting, and I apologize.
yeah, I looked through it too. I'm trying to remember.
So what happens when we get old? We don't have it written right in front of us.
But it's a good group of folks.
Let's go a little bit further into taxes on lending. If you're in a fund, how do you get taxed based on the income you receive from a lending fund?
Are you asking me that question, or are you setting me up?
No, I'm asking. Do you
I
know?
don't answer it.
The same way it would be if it was your own damn money.
Yeah.
So there are no tax benefits to being a lender. The benefits are from not having the responsibility of property ownership.
Right.
You're typically in the deal for much less than you would if you're owning it. You do not get the advantage of a appreciation over time.
Your risk is lower,
and you don't get the advantage of depreciation that you can write off. But at the same time, we like to call that return on effort.
Yeah.
The effort is much lower when you're not having to deal with taxes, tenants, toilets, trash.
That's right.
All the aggravation that's involved. And yes, you're going to have much more of a cushion between the market value of the property and what you're in the property for. When you're the property owner, you're in the property could be for what it's worth, but you still have an equity piece in between.
Right.
Hopefully your margin is a little bit higher too.
Yeah.
So you're not over leveraged. So boy, that was an easy question.
Well, too, when we're talking about lending, but the taxes and what you're paying on taxes, but and we mentioned the IRA piece. It's really important to understand too. You can lend out of your IRA, and you can also purchase properties out of your IRA, and it's really in most cases, you're better off lending out of your IRA and owning properties, out of cash type.
Yeah, there's a couple of things when you're in an IRA and you own assets in the IRA. At the end of every year, you have to tell the IRS how much that asset is worth. So if you're in a fund, it's fairly simple. The fund manager, along with copies of the statements as backup documentation, will fill these forms out. If you own these assets, in the IRA itself, not through a fund,
right?
You typically have to go out and hire an appraiser at the end of every year to tell you what the value is. So that's an additional expense and a real pain to do that type of thing. If you're lending and you're in a note, you just show them a copy of the note.
Yeah. There's
your documentation. There's no appraisal needed. So that part's a whole lot easier.
Yeah.
Now, the benefit of owning property, and I give you one right now. If you decide that you want your retirement forever home to be in a certain place, you can go ahead and buy it as a long-term rental, have it inside of your IRA, renting it, for the next 10, 15, 20 years, however long you have it. And then when it's time for you to move down there, because you're not supposed to occupy these things.
Right. Down there. He's already got his Florida trip planned.
You can take that home directly as a distribution.
Yeah.
And that, in the meantime, you can get it fixed up however you want it and then take it as a distribution.
Yeah.
And
that's really interesting.
Now, keep in mind, if this is not in a Roth, the reason that tax deferred is usually better is because you're assuming you're not going to be making as much money
when you
in retirement as you are in your active work time.
Right.
So you want to defer your taxes because you're going to be in a lower tax bracket, assuming you don't have this large house you've just taken out as a distribution.
Right. Oops.
So your tax bracket will probably go up when you take that distribution because it's a pretty large value at once.
That's right. That's right.
But then you won't have it again after that. So it's okay.
Yeah.
But I mean, you can still buy a house at a decent price and keep it, have it paid for, make money on it, and then turn it into your retirement home.
Right. The point of everything is don't not do a deal or do lending because you're worried about the taxes.
Yeah.
It's you know, we have to laugh at our mom, who we love, mom. She complains about the taxes that she has to pay on the interest that she's earning.
Yeah, bottom line, if you're paying taxes, you're making money.
That's right. We have to remind her of that.
They don't charge you taxes for not making anything.
That's right.
We hate that we have to give it up.
Yeah.
You're making money if you're paying taxes.
That's right.
And now there's some things to think about right now. If you have a bunch of assets, is it time to sell now before the taxes go up? Because we are assuming taxes are going to be going up.
I'm hearing all kinds of things.
They're going to try to raise taxes.
Yeah.
So do you go ahead and, especially now if they want to go up on the capital gains, do you go ahead and sell now?
Well, it's already 2021. Will capital gains go up in 2021? Or is it going to happen in 22? Who knows?
Yeah, well, they can't make any law retroactive. But you can certainly think about.
He might be able to do an executive order to change that. Who knows?
Well, you can try.
Anything's possible.
But anyway, that's something to think about.
Yeah.
Do you liquidate some of your assets right now and put it into cash and then become more of a lender than an asset holder?
Especially now that I think we're at the top of the market, but it just keeps getting better.
There's our show for next.
That's right.
Coming up.
That's right.
Inflation, deflation, or stagnation. We're going to count on you guys to type in and tell us what all this stuff means.
It'll be a short show.
So again, don't forget about QuestCon. You're going to learn tons. You're not just learning, but it's also about the networking. If you want to know where to find money for your projects or where to learn and invest alongside of other people, you need to do it with QuestCon because you're going to meet tons of people that are going to help you.
And the thing is you will be able to network because, if you are an investor looking to raise capital to be able to invest, you should have a multitude of private lenders. And this will be a great opportunity to meet other people that will lend you money. And if you're looking to lend, again, you've got a lot of investors that are looking for lenders. So
yeah, I don't want to speak out of turn, but we were at Freedom Founders this past week, and Quest alone said that there is something like $347 million in their account sitting in cash.
That's just theirs.
And think about all the other IRA folks.
Yeah, there's a lot of other really good
looking
companies
to invest in something. There's one of the things as you're investing and you get in and out of an investment, things get paid off, or you're just afraid to pull the trigger. There's money sitting there ready to invest. So if you're somebody that is working on projects, you need to find some private investors. That's there right. They are.
That's right. Awesome.
So Wednesday with Wendy. Make sure that you sign up on that link for the Calendly link. Wendy is usually booked out several weeks, if not months in advance.
We're looking into June right now. Okay. So, but it's worth it. I get so much out of it, and I love being able to connect people with other people as well. So
I get a lot out of it too. I'm across the room, and every time I say something out the door, Wendy's like, "Shut up!" I'm on a Zoom call.
I never say that. I just do one of these.
Well, I can't see it because I'm in a different office. So thank you guys so much. I know we were very exciting.
He isn't.
I'm pretty dry today. I'm just worn out from being gone most of last week.
Poor guy.
Getting started.
Taking one for
And
the
the
team.
pollen, good grief, the pollen's killing me.
But that means it's spring.
Yeah. Thank you so much for joining us on the Passive Wealth Show, the Ugly Questions segment. We are Carolina Capital Management. We are lenders in the Southeast, and we specialize in investment loans. So if you are a borrower interested in borrowing money, carolinahardmoney.com. Click on the Apply Now tab. If you're a passive investor looking for passive returns, click on the Accredited Investor tab. Don't forget to like, share, subscribe, hit the bell. And we're looking forward to seeing you in a few minutes on our next segment. You want to put that link up as well, Sharib, if you don't mind? There's another link to catch us on our next show, and we're going to be talking about inflation, deflation, stagnation. What do you think the market is going to be doing here in the next year or
Yeah,
two?
but we're going to be more excited about that. I'm going to give him some Sudafed, get him going, and we'll be good.
More caffeine, please. Talk to you soon.
Thanks.